And it's a rainy trading day right here in Lagos, Nigeria, but we see the markets are moving along just fine right now. But let's get to the top stories now. What's happening in the markets that we track at this point? Let's get a check on what's playing out with the oil market. We're still seeing that recovery there with oil prices. That started this week, but you know, at the end of the day, we're still seeing a 0.34% rise there for Brent crude, $67.91 a barrel. The U.S. grade, that's up 0.39%. So it seems the rise is continuing, you know, at this point. That's with oil prices after the big drop we had on Monday. But definitely, we still have a few more trading days to go at this point. All eyes still on the Israel-Iran ceasefire deal there. Both benchmarks climbed nearly 1%. That was yesterday, and that's continued today. Let's get a check on other stories now. We see Shell, they firmly dismissed reports of potential acquisition talks with rival BP, squashing months of speculation about a blockbuster deal that could have created a £200 billion energy giant. The denial comes after the Wall Street Journal reported early-stage discussions between the UK's two largest oil companies, sending BP shares soaring before paring gains. BP's New York-listed shares initially surged more than 10% before settling 1.7% higher, while Shell's stock, that dipped 0.8%. The Rumours gained traction amid BP's 32% share price decline over the past year, with activist investor Elliott Management warning that the company risks becoming a takeover target unless it accelerates cost-cutting measures. At that point, analysts suggest consolidation in the energy sector remains likely as firms navigate volatile oil prices and the transition to cleaner fuels. And to the metals market now, we see gold prices steadied in Asian trade today, taking some support from a weaker dollar after President Donald Trump criticized Fed Chair Jerome Powell and called for longer interest rates, lower interest rates. And we're seeing it's mostly green on the screen there for the metals market. But the big gainers today, we see platinum, that's up 4.47%, $1,403, snapping that $1,300 level. Palladium, that's looking more comfortable in the $1,000 psychological level, a big 3.05% jump there. And we see spot silver following 0.99%, by 1%, $36.47 per ounce. Then we see the safe haven there, spot gold, that's also up 0.28%, and U.S. gold futures at $3,360 per ounce. And as President Bola Tinubu sends to the tax reform today, its operationalization has received attention, especially for sections such as making the Federal Inland Revenue Service the sole administrator of taxes. The coordinating director, Compliance and Enforcement Group, Matthew Gwajumbola, believes that the new law will leverage specialization for efficiency. Have a listen.
What government has done with this reform is to allow for specialization. And what do I mean? Customs knows about trade facilitation. They take care of our borders so that illicit products don't enter into our country. And when people bring goods in, they properly declare, and people can do export, they can do import, and their business can go on. NUPRC is very good at regulating the upstream oil sector. They know all their onions. And so every agency government has set up is for a particular purpose. So the FRS is set up to process revenue for government. And so what the reform has done is to make that happen. So you do what you can do best. And in little economies, if I remember my days, there's something we call specialization. And what specialization does is it allows for economies of scale. I think every Nigerian should be excited with the tax reform that is coming, because we have this government to thank for coming into space with this reform, because every Nigerian is going to laugh. For example, lower middle level wage earners are going to pay little or no taxes.
All right, now to our first conversation, and definitely it's outside our shores at this point, as Kenya reels from violent protests marking the anniversary of last year's anti-tax uprising, with at least 16 people killed and 400 plus injured in clashes with police. We also see breaking news today. President William Ruto signed the 2025 finance bill into law, igniting fresh tensions in a nation already grappling with police brutality, accusations, and economic discontent. Well, joining us to unpack this, we have Steve Ogutu, who's a policy expert from Kenya. Hello, Steve. Great to have you.
Hello, Larry. It's a pleasure to join you this afternoon.
Fantastic. So what's it like over there in Kenya today? We're also getting reports there that President Ruto has signed the bill into law.
Yes, just today he signed the 2025 finance bill. Now it's a law now this morning. And if you remember yesterday, we had protests across the country. It is actually the first anniversary of similar protests that we had last year that largely were driven by the finance bill 2024 that was viewed by majority of Kenyans as very punitive because of the kind of taxes that were being introduced. And so yesterday's protests were largely to commemorate the lives that were lost then and to continue pushing for reforms in terms of good governance, in terms of reducing the cost of living and creating opportunities. Because as we speak, Kenya's unemployment rate is the largest in the East Africa region, standing at about 30%. So the bill that was signed this morning by President Ruto, I think the government really learned from the mistake they made last year. And I think they tried to listen to people. We didn't have much of taxes introduced to this new bill. But nonetheless, there were some aspects that were a bit controversial. For example, there was a component that was going to require citizens, the Kenya Revenue Authority, to access personal data of citizens. Because in Kenya we have a lot of mobile transactions, the mobile money, M-Pesa. And so they want the plan that the government had was to see if KRA could really access those type of personal data to expand their tax collection. But that was really fought back even at the National Assembly, and it didn't. That part didn't get to really pass. And so I think this is a bill that is largely acceptable, even though not the best for majority of Kenyans. But I think yes. So that's where we are as we speak, Vladimir.
Looking at what's playing out so far with the president signing the bill into law at this point, what next in your view?
Right. So moving on from here, Kenyans' expectations is we hope to see Kenyans hope to see better services in terms of education, in terms of agriculture, in terms of health access, because these are some of the critical sectors that drives Kenya's economy. The World Bank just early this year projected a growth for Kenya of about 4.5 to 5.3%. And this can only be achieved if the government will continue to introduce policies that allow the private sector to invest in the country, because only the private sector can really create opportunities that will help address some of the pressing challenges that keep on getting Kenyans on the street. The challenge of unemployment, industrialization can only be achieved when the private sector is supported. And I think the country needs better policies to encourage investor confidence. But without that, we will keep having Kenyans coming out on the street and protesting, and that scares away investors. Just yesterday, a lot of businesses were shut across the country, um, and the stock market performed very poorly yesterday. And for us to hit the mark that the World Bank has set as a target for our growth as a country, I think there is need for us to really strengthen our policy environment, make it be very predictable, because that has been another challenge, having policies that keep on changing, and therefore investors cannot really count on them. So I think that's really the way to go, in my opinion.
All right, and do you think Kenya's economy can withstand, the political turmoil, sparked by this finance bill, or will investor confidence and GDP growth, do you think that might take, a significant hit?
I think generally Kenya's economy has demonstrated some resilience. As you know, just in the just concluded election, which was held in 2022. Before that, we had the 2017 election that was highly contested. We had a lot of political violence after that, but we were able to really reboot, and the economy went back, and we've experienced some growth. Just recently, I think about a year or so ago, our currency had really weakened against the dollar, but the government really tried to introduce certain policies that helped to address that. I'm really confident that if the government can try and address the pressing issues that citizens are facing, especially around youth unemployment, and expand the democratic space, and really find a way to have dialogue with even the people in the opposition, that will help create some level of political stability, which is a very important prerequisite for economic growth in a country like Kenya, and I believe in any other country. We have to get our politics right. We have to get our democracy right, because that is an important prerequisite, like I said, for a stable economy.
From what you're seeing so far, are we still seeing protests over there, right now, or is there some kind of calm?
No, right now things are very calm. Yesterday, I didn't even go to work because the Gen Zs here declared yesterday a Gen Z holiday. That's what they're calling it. And the central business district, nobody could access that. The parliament was locked. As you remember last year, they breached parliament and set part of it ablaze. Yesterday, there were plans to see if they could access the State House, but that was also barricaded. I think the police picked some lessons from last year's protest, and they were a bit prepared this time. I think they were a bit also restrained in terms of how they handled the protesters. Even though we experienced some killings of about 8 Kenyans, I think the number is still growing. But I think they really try to really exercise some restraint, if you ask me. But as we speak right now, Kenyans are back to work. I think things have gone back to normalcy, as it were.
Hope normalcy, continues over there. We'll keep tracking what's playing out there with the signing of the finance bill right there in Kenya. Thank you so much. That was Steve Ogutu, the policy expert from Kenya. Thank you.
Thank you so much, Larry, for having me.
All right, now to our next conversation that also impacts Africa. At this point, we see Africa's digital economy that's surging, now valued at approximately $180 billion, and projected to exceed $300 billion by 2030. A transformation driven by booming mobile penetration, fintech innovation, and supported supportive policy frameworks and governments and multilateral institutions that are taking action at this point. Well, the African Union's Malabo Convention, in force since June 2023, lays the continental foundation for cybersecurity and data protection, reflecting a shift from fragmented rules to harmonized governance. Joining us to unpack this now, we have Justina Oha. She's the CEO Digital Equity Africa, joining me right here in the studio. It's great to have you.
Thank you, Laddie, for having me. It's good to be here.
It's good to have you, and definitely I see the rains didn't stop you.
Absolutely not. Nothing can stop us.
Fantastic. So, with what we're seeing, so far with the growth of artificial intelligence, now you can't talk about anything without talking about AI, at this point. Talk to me about what you're seeing, so far with the growth of artificial intelligence, on the continent, and what you're expecting.
Oh, fantastic. Thank you for having me once more. I mean, Africa's digital economy is no longer a cliche, right? It's literally the frontier for our next growth wave, right? In order to grow as a continent, we have to factor in all of the key players that are enabling the digital economy, one of which is infrastructure. We also have their talent, right? And access to digital services. And just going from the top, if you think about infrastructure on its own, Africa lays today on a deficit of over 100 billion in infrastructure investment. If these infrastructures are not in place, people and citizens of the continent are not able to be participatory in the digital economy. I personally believe that AI, or the adoption of AI, the widespread adoption of AI on the continent, is one of the ways that we're going to enable more digital inclusion on the continent. Recently, we gathered over 5,000 people at Landmark at a conference, Kids Tech Fest, right? It was parents, it was educators, it was children. And what was the message? The time is now. Digital services are no longer for the elites. I guess the conversation now is how can we adopt this for everyday people? How can we adopt that for the growing pipeline, our children? But again, just speaking broadly to the conversations around like digital infrastructure, if you look at that deficit that is on the table, over $100 billion in value on the continent, it's not something that only the government can solve, right? It's not a problem that, local or, regional budgets within government institutions can solve. And this is a call really for more public-private sector partnerships. And in doing this also, for both hands to shake, the private sector also needs to feel comfortable working with the government in bringing about this transformation. So what are the policies that can de-risk investment for?
Right, I'm talking about policies, at this point. There's also, that regulation. There's been so much talk, even the other economies now, about how to regulate, artificial intelligence.
That's correct.
What's the conversation like here?
Well, it's an emerging space, right? So honestly, there is no government or institution that has figured out artificial intelligence. 5 years ago, it was just a buzzword, but today we hear it everywhere. So it's an emerging space, right? But there are key things to look at when you look at the adoption of artificial intelligence. Number one is safety, because with the exposure of any digital asset comes cyber risk and safety issues. Those are some of the things that we treated during the conference that we had. Like, what does it mean to safeguard people and children? Because with any digital proliferation, there is also like a backdoor that is open where people are now exposed to risk. There's a lot of conversations going on within the local government space. When I say local, I mean Nigeria and on the continent level, to sort of develop framework for keeping people safe. If you look at artificial intelligence as a whole, as a continent, it is as though we're playing catch-up, because initially it wasn't built for us. And so there's a lot of stimulation also going on the continent to have more participatory, outlook to it. We're going to have to train this model to understand our own context. There's an African context out there, which is mostly lacking. While my team and I were researching for the projects that we're working on and the conference series for children, we found that a lot of prompts that you give didn't give back within the African context. And so I see that there's a lot of conversations happening in silos. on how this can change both on the private sector and the public sector level. But what would be interesting is for the harmonization of that to occur, and then we can move forward as a continent.
Right. Now, you did talk about the fest you had earlier, and trained about 5,000 kids on artificial intelligence.
Yes.
And do you think there's a risk that we might get to a point where we rely too much on artificial intelligence that brings down or reduces natural intelligence? Is there a risk for that?
Absolutely not. And I think and this is why we're having these conversations, right? Lagos was our first stop. We're going to go to other cities, Abuja, Kano, and other cities to host similar conferences. And what the message here is, there is a safe way to adopt AI, either for a child or for an adult. Take, for example, if a child prompts ChatGPT or the Pythagoras theorem assignment, it's going to give that child all of the answers without necessarily walking them through the steps. And then we're now missing like the elements of hard work and the rudiments of character building, which is what we all went through in those difficult exams when we're soaking our legs in water.
Solve for X,
absolutely.
Solve for Y.
So the thinking behind it is what builds character and intelligence. That is why we're sitting here and we're able to concentrate and have this conversation. We didn't have things passed down to us. But there are safe digital tools, AI-enabled, that support children's learning, right, in a way that still stimulates their journey of discovery. And that's why we went live with an online AI learning community on that day and an LLM for kids called Board AI. So we did a live demo on stage, and the prompts don't give you the answers. They walk you through the steps. But if parents don't know this, by the way, parents, if you're not teaching your kids to use AI the right way, they are doing it the wrong way. They are using your chat accounts and getting stuff done. And so what we're saying is that the face of parenting has changed, right? Digital parenting is now a thing. And every parent needs to pay attention to those. You don't shut the door, but you have to hold the hand of the child and safely guide them to be able to navigate in a way that doesn't shut down their development process. If you're going to prompt, it's all prompts, right? If you're going to prompt chat or any tool to create beautiful art for you, if you don't know the technique to ask it to add, maybe the brush stroke or the additional light effect, how are you going to prompt it?
Descriptive.
Absolutely. It's based on what you feel that you would get back. So what is then the balance, right? We are preparing our children for relevance, or global relevance, to power the workforce of the future. So they have to know about these tools, but how then do we create the balance? That's why we created the platform for the conversations, the conference series, the online learning community, Future Minds, and some of the other initiatives that we're rolling out.
Well, so much to unpack there, and definitely we're still tracking the growth of artificial intelligence at this point. Hopefully it doesn't take over our lives.
No, it won't.
And we're able to control it. Thank you so much. It was great having this conversation with you, Justina.
Thank you.
Nnamohaje, CEO, Digital Equity Africa. Thanks for coming on today.
Thank you.
All right, after the break, I will look at the new oil. That's data. Then we'll find out what's playing out with the markets that we track. That's in a moment. Just stay with us. All right, now we're going to find out what's playing out with the markets that we track. Definitely, we did see some profit-taking earlier. That's for the NGX. We'll see if that's actually continued at this point. Willie Bong has the details. Definitely. And it's a rainy trading day, but I guess...
Like they did say that, we did talk about it like yesterday, that the markets cannot just stay up forever. We definitely have to come down.
Yeah.
So we're seeing markets, profit taking the markets already, and it's like, oh, huge. And I'm like, okay, investors are like really reeling, especially when we see profits from, high players in the market like MTN Nigeria, Owando,
But still 120,000.
Oh, yes, 120,000. We did hit 121 yesterday. So, yes, so we're down from 121, 120, which we hit yesterday at intraday, but we're still holding on to that. Hopefully, it doesn't go further down.
121 the new resistance?
We hope so. That's what I said. We hope they'll crash below that. But let's just see how major markets are trading at intraday. They were mostly in positive territory. We see Nigeria's NGX, the lone loser, trading lower at 0.78%, still at 120,000 points. And GSE in South Africa is trading up at 0.87%, 96,139 points. Let's look at Egypt's EGX, see how they traded intraday. Was up, I could tell you, 1.24%. That's a big one for that index. Hopefully they sustain that at the close of trade. Meanwhile, we see the Nairobi Securities Exchange closing Wednesday's session in green territory, up 0.68%. This index has been flying for a while now. Hopefully we get an analyst to discuss that very soon. Well, let's dig deeper into what's happening at the NGX, and we have Oreoluwa Odetunde, research analyst at Ancoria Asset Management. Oreoluwa, it's good to have you on the show.
Thank you for having me. Good afternoon.
Okay, Oreoluwa, we are seeing profit taking after 6 consecutive positive market sessions. Are we beginning to see some correction here?
Sorry?
Are we beginning to see correction in the markets after trading for 6 consecutive positive market sessions now?
I can't really say it's a correction yet. I would still say investors are just gradually taking profit of the market. And like you have rightly said, on a week-to-date basis, I mean, the market has remained very strong. On a year-to-date basis, it's up about 17%. We've seen sectors like the consumer goods sector outperform the other indicators, the other indexes. The sector is up by over 52% on a quarter-to-date basis, and on a month-to-date basis as well, it's up over 10%. So we've seen very strong growth in the index. But I mean, when we started to do some technical analysis on the market, we saw that the market is already in an overbought region. So, like you had rightly said, the profit-taking activities we are seeing is quite healthy. We still think that there is some upside, but there's still some upside potential in the market. We still expect to see some bullish activities, but like you said, I think it's healthy that we see some level of profit taking happening, but we don't actually think that this is a correction yet.
Okay, that's good for investors that are listening to this. But Oreoluwa, let's look at some of the stocks that have been driving this positive sentiment. MTN Nigeria has returned nearly 80% since the end of 2024. How much of that rally is driven by the recent 50% tariff hikes, and how much is due to stronger earnings and renewed investor confidence here?
Some part of the company's growth. I mean, its price increase, the 80% increase that you mentioned year to date, I think it's majorly been driven by fundamental changes that we've seen in the company's business model. You had rightly mentioned that we have had a tariff adjustment that had been done. Apart from that, we're also seeing a lot of data-driven demand in the company as well. In terms of the data subscribers, we are seeing that has grown by a cumulative average growth rate of around 50% in the last 5 years. So there's still very strong growth in its revenue. And in terms of this, from a cost perspective as well, we're seeing that the company was able to renegotiate some of its tower lease contracts. And we remember that its lease liabilities made up over 70% of total borrowings. Apart from that, we're also seeing some level of cost efficiency in terms of its infrastructure sharing agreement with Airtel Africa. So I think the company is trying to put a lot of things in place in order to reduce its FCY exposures and also achieve a level of operational efficiency. So I think it's majorly the rally we're seeing is majorly driven by a significant change in the company's business model. I mean, we still do expect to see a bit of positive sentiment. I think analysts forecast that the company's share price is expected to reach about 400 naira later this year. I mean, we're yet to see that play out, but I still expect to see some level of positive sentiment in the stock going forward. I think it's still largely dependent on its earnings, its Q2 and Q3 earnings as well.
Okay, Oreoluwa, you mentioned these operational models that you talked about. Is this a resurgence in this profit taking? You talked about the 400 naira mark we're looking at here, but is this sudden resurgence or recovery an indicator of investor confidence, or is this just a short-term pop in their share price and probably we'll see a pullback in MTN share price?
I don't think it's short-term. I don't think this is short-term. I think we're expected to see the company trade within these levels. I think since the start of the year, we've had a lot of analysts revise their forecast of the company's EPS or the company's margins as well. We still also expect to see some level of margin recovery, because if you see in 2023 and 2024, in terms of the operating margin of the firm, that fell to around 24-25% levels. But typically for MTN being a market leader in the telecommunications space, we usually would see his margins somewhere around 34-35% level. So we expect to also see some level of margin recovery, which we expect to continue to drive significant sentiment in the stock. I think one thing that the market might likely be pricing in was also the fact that the company might likely pay dividend this year, but we still see that might not be the case at the end of the day, because apart from the fact that revenue has been increasing quite significantly as well as profitability, we've seen that the company is also still increasing its capital intensity. There's a lot of capital expenditures also going into the firm. So should the company, if the company continues at this rate in terms of its capital expenditures, it will have a negative effect on the company's free cash flow and its ability to pay dividends.
Okay, so Aurelua, #1 million investment in MTN would now be worth about, say, 1.78 million naira. But what does this performance say about a broader sector momentum, and is this sustainable beyond the dividend payout expectations that we're talking about here?
Well, it is. I did mention that we're seeing, apart from, the gains that we're seeing is more broad-based. It's not just in the telecos space. We've seen very strong growth in cyclical sectors like the industrial goods. We've seen some growth in the industrial goods sector, although the index is still down by about 7%. We still expect to see positivity along the lines, especially in the second half of the year. But for the consumer goods sector, we've seen very strong growth. It's a defensive sector, so we've seen very strong growth. And the sector was impacted by a lot of the FX devaluation and depreciation that we had in the last 2 years, as well as significant inflationary pressures. But it appears like we are achieving some level of macroeconomic stability in the economy. Inflation has been trending downwards. Exchange rate is a bit more stable, and all of that. So we're seeing a resurgence in terms of consumer spending. Recall that last year, in terms of consumer spending, when we looked at that component to total GDP, that component had actually shrunk to around 25%. It used to be around 60% levels, but it shrunk to 25%. But now that we're seeing all of these cost pressures are gradually dissipating, we are seeing a resurgence of consumer spending, which we think will be very positive, or would positively impact the corporate earnings of a lot of defensive sectors like the consumer goods sector, as well as the the industrial goods sector, which tends to be quite cyclical.
Okay, talking about consumer spending, I just want to chip in there, Aurelua, that we know that 50% tariff hike is still biting on consumer spending there. How much of disposable income do the investors or consumers have to spend more on data or airtime? And well, we do have to make calls regardless. But let's slip quickly to another sector, another stock, O&O. We see that Q1 strong start for the company. About seeing the stock beat a wane in investors' interest, profit taking, it gained 10% yesterday, but we're seeing profit taking in O&O today. Interest is beginning to wane, isn't it?
Yes, slightly. And you'd see that in terms of the de-escalation of the Middle East tensions, the way Wando has somewhat changed his business model. It's now majorly, its earnings is majorly driven by its upstream activities. So you'd see that, the earnings is majorly driven by the movement that we see in oil prices. And now that we saw the escalation of the trade of the war between Iran as well as Israel and the involvement in the US, we saw that oil prices started to make its way down, and so that negatively impacted the stock price of O&O.
Oh, definitely hope that's what's impacting it. Well, thank you so much, Aurelua Odetunde, research analyst and Courier Asset Management, for your thoughts and perspective on the show today.
Thank you for having me.
So let's look at other markets now, which is still on the rise in the Gulf region. On Thursday, it extended gains from previous sessions amid rising oil prices as a ceasefire between Israel and Iran appears to be holding. Let's see, Dubai rose 1.1% and rising for a fifth session, pushed up by materials, industry, and finance sectors. Abu Dhabi is also up 0.55%. Still within the region, let's see, Saudi, as a Tata World, was up 0.48%, extending its gains for a fourth straight session. Seeing it there, 11,024 points, with the most sectors in the green. We saw oil major Saudi Aramco adding 0.3%, and the Red Sea International climbing 3%, and that boosted that Tata World. We see Qatar also in the green, 0.39%. Let's look at the U.S. now. Stock futures rose in pre-market trade today. S&P futures up 0.37%. We're seeing that, and the Nasdaq 100 futures climbing 0.51%. Dow Jones, the Dow futures also gained 0.28%, and this comes as the S&P 500 hovered just 1% below its all-time high. Markets have rallied over 22% since April's tariff-driven lows, though some analysts warn that the momentum may not last amid geopolitical tensions and fiscal concerns tied to Trump's economic policies. Investors are awaiting the U.S. jobless claims data due later today, while earnings from Walgreens and Nike are also in focus. Meanwhile, the Israel-Iran ceasefire announced by Trump appears to be holding for now. Let's look at Asia, how they perform at the close of business. They traded mixed on Thursday as investors continue to weigh the ongoing ceasefire between Israel and Iran. Japan's benchmark Nikkei 225 rose 1.65% to close at 39,584 points. Now closing at a 5-month high since the end of January. That's a big one for Japan. South Korea's Kospi was down 0.92% to end the day at 3,079 points. While the small cap Kosdaq still in South Korea retreated 1.29%. Now let's move to China and see how they performed. The Hang Seng Index there declined 0.61%. We're seeing that on the screen. And the Shanghai Index in mainland China slipped 0.22%. Looking at it, not great for that index, but we're hoping that China recovers tomorrow. And India's Nifty 50 was up 1.21% to close the trading session. Well, it's a mixed bag for Asia markets, especially with the Iran-Israel ceasefire. Oil prices trending back up. We're hoping to see not more cautious optimism here, but maybe more cautious buying, and like moving from red to green, especially for Asia markets, and Japan moving to a 5-month high. Hope that trend keeps going higher.
All right, final trading day of the week.
Tomorrow.
We'll see how
markets
what happens
to the markets.
Overnight.
And you did this, so do not let's forget the UK, pound sterling rallying today, through a 3-year high against the dollar, reaching a $1.37. That's like, it's a great one for the pound sterling, and there's been trending a bit, around the $1.20, the $1.19 and 18. But we're seeing it climbing back up, and we see U.S. President Donald Trump saying he's going to replace the Federal Reserve
so much
chairman.
drama there, and definitely, I guess dollar weakness means everyone else gets to rally.
Yes, I hope the Naira rallies too.
We'll see. We'll see, definitely. Thanks so much, Will, for the details there. Well, let's take it on to European markets now, see how they're doing. We have DW correspondent Chiponda Chivelu. Great to have you, Chip. So what are the markets saying right there in Europe?
Well, Ladi, today European shares have been trading higher, and that is mostly due to the fact that Israel-Iran ceasefire appears to be holding for now. And the Euro Stock 600 is actually up around 0.13%, and the DAX is trading at around 0.4% higher. Now, investors have also been looking at the outcome of the NATO summit on Wednesday. Member states agreed to spend 5% of GDP on defense, so that would be 3.5% on the military and weapons, plus 1.5% on other defense-related items, such as even infrastructure in some cases. And today, investors will also be watching out for the outcome of an EU summit, but that it will come very late in the day. Now, elsewhere in currency news, the euro has actually jumped 0.6% against the dollar, and it is now at its strongest level against the greenback since 2021. It is trading at $1.17 for every euro. And that came, of course, after reports that U.S. President Trump has a short list of candidates to replace Fed Chair Jerome Powell, and he may actually announce Powell's successor by September.
Yeah, I guess President Trump then trying to spite the Fed chair, but we'll see how that plays out. But turning to other news now, the European Commission, they've adopted the Clean Industrial Deal in a bid to turn decarbonization into a business opportunity for the industry. Tell us more about this.
Well, this deal will actually make it easier for European businesses to get state aid for projects that cut their carbon emissions, and industry will be able to benefit from temporary relief for power prices until the end of December 2030. And the goal is to allow European businesses to make the transition to climate neutrality without having to bear too many costs and lose out to rivals in the United States and China. And of course, the deal is also about the competitiveness of the European Union as a place for doing business. Now, Brussels is also hoping that this deal incentivizes companies to stay in Europe, also with the lower energy costs, because European industry has been complaining about power prices. And finally, the clean industrial deal will also make it easier for private investors to invest in green projects.
So which businesses are set to benefit from this?
Well, it is mostly businesses in Europe's industrial powerhouse, Germany, which will benefit immensely. Now, German industry has struggled since it lost access to cheap Russian energy, so energy exports, that was gas and, of course, oil as well, and coal, following Russia's full-scale invasion of Ukraine, and that was in 2022, early 2022. And the hope now is that this change will help even the playing field with competitors abroad by allowing the German government to provide state aid for energy-intensive industry here until 2030. And during that time, the companies will be expected to make the transition to greener energy and technologies. Now, on a political level, this EU deal is also a big win for Germany's new government, because lower energy prices for industry was one of the election promises. And of course, in industry here is a major employer in the country. So obviously, still there is a question, and one question is whether this is a little bit too late, because of course, while European businesses have been struggling in recent years, their peers elsewhere have been racing ahead in terms of innovation. And other industry suppliers say that this deal doesn't do enough to help regions that have been dealing with industrial transformation. They say that more could be done to support reskilling and also investment needs in the regions that rely heavily on one particular industry in Europe.
All right, Chip, thank you so much. We'll keep tracking and see who profits more from that deal there. Thank you so much for the details.
All right, thanks, Laddie.
All right, so all the stories now. As the United Nations marks its 80th anniversary, UN G20 Sherpa Nelson Mufu says tackling the challenge of climate financing, especially for Africa, demands urgent action. He emphasized the need to scale up international commitments, reform global financial institutions, and strengthen African-led mechanisms to access and manage climate funds. Take a listen.
Gap of about $4 trillion for sustainable development financing. And then when you layer on that climate financing as well, you realize we're nowhere on track to be able to achieve as quickly as we need to financing that will make a difference. So a lot of effort has to be done. The Secretary General of the UN has what he calls the SDG stimulus, which is to say immediately $500 billion needs to be made available and mobilized. So the Financing for Development Conference in Seville will help in that regard, but we need much more. Private sector needs to come in. The cost of capital needs to be addressed. The cost of African countries borrowing and even their risk profiling needs to be addressed. So there are a number of things that need to happen through the G20 process, through the UN processes, and also the capitalization of the multilateral development banks. So when that happens, if that happens, as it must happen, then we will make the progress that we need to make.
Well, let's take it on to Kenya now. See monthly new car sales in Kenya. That dropped by 2.7% in May, the lowest so far this year, as dealers navigated a challenging business environment coupled with reduced government uptake. Kenya Motor Industry Association, KMI, data shows 11 major dealers of new vehicles sold 988 units from the different showrooms across the country, down from 1,015 units in April. This was a further drop from 1,202 vehicles sold in March, which has recorded the best performance so far this year, with completely knocked down units accounting for the biggest percentage of sales. And now to the commodities market. Now, definitely still talking about prices of some of these commodities. We see the price of a 70-gram carton of noodles. We've seen that price jumped 29% from 7,500 naira in December 2024 to 9,700 recently. Meanwhile, food inflation that has decreased from 40.1% to 21.26%. That's according to the rebase data. Let's bring in to help us unpack what's driving this, Toju Megasin. She's an analyst with financial derivatives company. Hello, Toju. Great to have you.
Good afternoon, Ladi. Thanks for having me.
Yeah, so what are we seeing now with the price there moving in a different direction with what we're seeing with inflation? Is that pointing us to the reality of things?
Not necessarily. I think it's very important for us to really, a key thing here is understanding inflation. To be more specific in this case, understanding food inflation and what that represents, as that is a reflection of the price changes in a wide variety of items inside the basket, not just one commodity. That being said, we're speaking about noodles. Entirely speaking, a drop in inflation doesn't necessarily mean that we wouldn't experience, or some items in that basket wouldn't experience a hike in prices. More on that note, taking into account the rebasing of the food inflation basket at the beginning of the year, when we're looking at these new numbers, the index calculated for the inflation as well as the weights being readjusted have totally changed as opposed to recent years. Now, talking about the good in question, noodles, it's key to understand that noodles is a processed and packaged good, which makes it more susceptible to changes in input costs, such as wheat, which is like wheat, cassava, palm oil. These are all inputs that are mixed together in order to make noodles. And we also take into account the transportation costs, the packaging costs, which could also have a hand in increasing the price of.
Right. So what are the substitutes here to noodles? Are we seeing a shift, from noodles to the substitute?
Well, yes, we could definitely see a shift from noodles to from rice to noodles, just based on a number of different factors. A number of factors varying from the fact that noodles is a cheaper and more instantaneous, it's an easier commodity to cook in regards to when you're dealing with rice. On the other hand, you have to account for, okay, what am I going to spend on eating this rice with? Whereas with noodles, you're more than likely just eating noodles on its own. The preparation time for noodles is way more quicker. So yeah, there are a bunch of different factors that lead into that, for sure.
All right, we'll keep tracking those prices. Thank you so much, Toju Megasin, analyst, financial derivatives company. Thank you.
Thank you.
All right, so other stories now. We see Italy. They've converted nearly 70% of its concessional loans to Ghana into grants, what is considered a significant boost there to the local economy. The gesture wipes off 70% of Ghana's indebtedness to Italy, which ultimately reduces the national debt portfolio. The Italian ambassador to Ghana, who made this known during a courtesy call on the presidency, said the move was a demonstration of Italy's commitment to support Ghana's economic recovery and long-term growth. I will see Ms. Ranali posits that Italy recognizes the economic challenges Ghana has faced in recent years and expressed their belief that easing the country's debt burden through the conversion of loans to grants would create the fiscal space for development. And Fitch Solutions are warning that a sharp decline in global price of gold, potentially triggered by changes in U.S. trade policies or easing geopolitical tensions, could severely weaken the cedi as the surge in inflation and interest rates. The rating agency said this could severely weaken Ghana's external buffers and renew downward pressure on the cedi. In its latest country risk outlook, the UK-based research and analytics firm warned that such a scenario would strain the Bank of Ghana's capacity to defend the local currency, potentially unleashing another round of cedi depreciation. Let's get a check on other markets now, see what's happening with crypto there. We're seeing Bitcoin there maintaining, but a couple of altcoins in the red right there. And there's still sentiments coming from last weekend there where we saw big drops. We're still seeing that recovery there. Bitcoin holding up, trying to make a run back to 109,000 level. We'll see if that happens to some of the headlines in the markets. Now we're seeing Guotai Junan International Holdings Limited, their shares that rallied about 100%, 300%, over 100% at this point after the broker obtained regulatory approval to offer trading services of cryptocurrencies in Hong Kong. We see the U.S. Director of Federal Housing, FHFA, William Pulte, directed Fannie Mae and Freddie Mac on Wednesday to prepare their businesses to recognize cryptocurrency as an asset for mortgage applications. This directive marks a potential shift in how the government-sponsored enterprises evaluate assets for mortgage qualification. Now, we see Metal Planets, they've topped Tesla in Bitcoin holdings there. Most of these companies in the U.S., they're grabbing most of those Bitcoins. There's a Japan-based company, that's Metal Planet, and they're topping Tesla there with Bitcoin holdings. All right, to our next conversation now, we're looking at stable coins at this point. It's all about adoption. How's it growing? Let's talk to Nathaniel Lewis, who's the president, Africa Stablecoin Network, joining me via Zoom. Great to have you on the show.
Hello, Ladi. It's nice to be here.
Yeah, so still a lot of talk about stable coins. We're seeing Nigeria. I think the country is leading right now with stable coin adoption, in Africa. Talk to me about, how you're seeing this, right now with Nigeria playing that role. Are there any risks there?
There are not really risks. Of course, there are risks with emerging technologies, there are risks with AI and everything. But you look at technology first from the point of what is this about and how does it add to us and how can we limit any risks that come with it. So stable coins are like coins that are tied to a particular asset. For the sake of this interview, I'll just say a stable coin is the digital currency of a fiat, is a digital version of a fiat of a local currency. So you can have a stable coin tied to Naira, in which one of that stable coins mean 1 Naira at any point in time. We have the CNGN, we have the e-Naira, we have stable coins like USDT, USDC that are also tied to the dollar. So sometimes when people cannot access the dollars, if they're able to access the stable coins, then they can use it for exactly the same transactions that they could have used the physical dollars for. So those are what stable coins are. And they're a big plus to emerging markets like Nigeria, where there's scarcity of foreign currencies, where people are looking for currencies to make imports, to make international payments, and all of that. So we've seen that stable coins are beginning to become the new way for people to pay. Rather than go to look for an aboki, buy dollars, deposit in your domiciliary account, people can just stay in their houses, purchase stable coins, and pay anyone, anywhere in the world.
Right. What about that risk of depegging there? We did see what happened with algorithmic stable coins a couple of years ago. Is that still a risk right now with stable coins?
That's a general finance risk. Can the Naira depeg? Can the dollar depeg? And what that means is there a time in which people would say, oh, as it happened before in history, whereby money falls or loses its value? So is that a risk? Yes. But is that something we've really seen happen with most of the stable coins? No. And that's because most of the stable coins are regulated. So a stable coin is not like the usual Bitcoin that can go up or down in value. This one, their values are fixed. So for, let's say, Theta to lose and say, oh, 1 Theta is no more 1 USD, it's now 0.8 Theta or something, that means there is an issue somewhere, right? And what do the regulators have tried to do? You look at the Genius Act in the US, also called the Stablecoin Act. The Nigerian SEC is also working around some form of stablecoin regulations. So the regulators have come in to be sure that the companies, the organizations releasing these stable coins have enough reserve to back the stable coins that they are issuing. If an organization is saying, oh, I'm issuing $10 million worth of stable coins, they must have that $10 million worth of reserve. If they're issuing 1 billion naira worth of stable coins, they must have that in reserve. At any point in time, you must be able to swap back one for one. And that's the role of regulation to ensure that this is consistently monitored and balanced.
Right, and do you think it's an easy job, for the regulators to, monitor, the pegs and, reserve balances?
It's not really whether this is an easy job or this is a difficult job. It's really about this is the future of finance. If stablecoins succeed, it's going to reset everything we know about money. I'll give you an instance. In Nigeria, you go and pay for a table water and you transfer money, and the person tells you, oh, you have to wait until I receive it. In the US, that wire transfer takes 3 days to be confirmed. Most of international payments and trade happen on the US dollars. And you don't want to know how much is paid on fees, how much is lost to fraud, how much is lost to changes in currency value before transactions are completed, how many days people have to wait. So payment is transitioning. What we know as banking is transitioning. Right? Just like AI makes things, I'm doing this interview remotely. AI has made things possible that we didn't think were going to be possible. That is what stable coins is doing to finance in that sense. In the future, our children are not going to have regular bank accounts, right? Because just like I can be here speaking to somebody in France, we have such currencies that can be used across borders globally that are not limited to a certain geography.
Right.
And that's the beauty of this.
All right, definitely a lot to unpack there, and we'll keep watching how, regulation catches up with the growth of stable coins. Thank you so much. Nathaniel Luz is President, Africa Stablecoin Network. Thank you for coming on today.
Thank you.
All right, that's the show, and that's how most of major markets that we track are looking. It's still a rainy trading day right here in Lagos, Nigeria. We'll give it a close later on. That's for the NGX. From me and the team right here at Channels HQ, it's bye for now.